Robert, the latest student loan forgiveness updates I'm aware of is the Biden announcement that 800,000 borrowers just got 39 billion in automatic loan forgiveness. Is there any other breaking news?
No, I mean, I think you hit the sad nail on the head, which is student loan repayment is going to be restarting here with the first payments due in October, but that interest starts accruing on September 1st. And so it's been, almost 44 months, I think, at this point in time, that borrowers haven't had to pay their student loans. And a lot of these little forgiveness announcements that you're seeing are really like, parts of other programs that already existed that the government's kind of failed in their bureaucracy of over the years. And I think the Biden administration is really kind of throwing this stuff out there to try to get wins, since their big program of $10,000 or $20,000 for everyone failed in the Supreme Court, which a lot of, your listeners probably are aware of. So, to try to say like we are helping people, they're like, look, we're giving other people loan forgiveness, but those are all part of other programs that those people have actually been deserving of that loan forgiveness, and it's just been stuck in bureaucratic limbo for years.
If you haven't noticed yet, we're talking about student loan forgiveness, and I'm here with Robert Farrington, the founder of The College Investor, an independent advertising-supported financial media publisher focusing on news, product reviews, and comparisons. So I do want to talk a little bit about that. Like you said, 42 months, you're more exact than me. I said about 3 years. People have not paid their loans or had to have paid their loans. I guess they could have opted into doing so. Can you talk a little bit about the student loan hardship programs and how to apply?
Yeah. So, the biggest thing that I think every borrower needs to be aware of is that, hey, your loan payments are going to resume. And here's a crazy stat. About 20% of all student loan borrowers have never had to make a payment in their entire life yet, because these people have graduated in the last 3.5 years or so. And so this might be the very first time that they're even looking at their student loans. And so, the Biden administration is trying to be very generous in hey, if you miss October, they're going to give you a 12-month grace period. They're calling it the on-ramp period, that they're not going to report those late payments to the credit bureaus, which is good because, having missed payments can tank your credit score very fast. And you might be saying well, what does that matter? Well, your student loans from the federal government will never go away. The government has scary collection powers. They can garnish your wages, garnish your Social Security. They can take your tax refunds. They can go after you in a lot of ways, and they don't even need to go to court. So if you start missing payments, they're going to give a 12-month on-ramp period before they start doing those crazy things. And then you have your credit report as well, which can drive up the cost of your whole life. I'm sure you've talked about credit before on the show, but having a bad credit score can make it harder to get an apartment. It can make you have to pay deposits for things like your cell phone, right? They don't just let you just take your cell phone plan. You got to give them $100 or $200. It can make your insurance higher. So that's helpful for people that might not even know what to expect for their student loan. So big takeaway, your payments will be due. If you don't know what to expect, you need to go to studentaid.gov and or your loan servicer's website. You need to make sure they have your contact information because you don't want to miss that first statement, that first bill, right? So chances are you could have moved in the last 3 years. You could have signed up for these when you were in college and used your college's email address. So they don't even have a good email address for you anymore. You need to make sure that information is updated so that you know what your loan payment is. And that way you can make that first loan payment. And if you miss that first one, well, then catch up right away. But you do have a 12-month grace period, basically, to make sure you don't miss it. But your interest will accrue during that grace period. So missing it's still not going to be a great thing.
Yeah, it's 60,000. And that was actually before inflation. And so it's probably, I'll underestimate. It's probably around 70,000. CBS News did a study that the difference between a poor, which was, they had a range, but I'll say 650 or under, and a good credit score was 740 or above, was $60,000 across student loans, home, like you said, apartment, cell phones. So I think people, even car insurance, I think people would be surprised by what's impacted by their credit score. Another conversation.
It's another conversation, but just realize that if you think you're just avoiding your student loans, it really ripples into so much more. So just keep that in mind.
Yes, agreed. And you also actually educated me about 5 minutes before we started this about the Fresh Start program. Can you tell people how that works?
Absolutely. So, there was about 7 to 10% of all student loan borrowers before the pandemic were in delinquency or default. That means they were late on their payments or they hadn't paid their student loans in a year. And historically, that's been about the worst financial place you can be because of all those scary things we talked about with garnishments and tax refund offsets and your credit score being tanked. Well, the Biden administration is doing this thing called Fresh Start, whereas if you've been in default, you call or you go online to studentaid.gov and you enroll in an income-driven repayment plan and you start making those payments on time, they will start doing good things for you. Some of the biggest ones is that the default is going to be removed from your credit score. If you stay with it for 7 years, the delinquencies will be removed all the way back through for 7 years, which all that stuff will significantly boost your credit. It can make you eligible again for future financial aid. And it just does a lot to, significantly improve your financial life. So if you have been not dealing with your student loans before the pandemic, now is a great time that you get this fresh start. You just got to call Student Aid or call your loan servicer and say, I want to sign up for Fresh Start. I want to get on an income-driven repayment plan. And it can really help fix some of that financial, stuff that's been happening to you as a result of ignoring those loans.
So you talked a little bit about it in the beginning. What's happened here? So there was student loan forgiveness that we were fighting for, or I won't say we, present company may or may not be included. You can figure it out in the comment section, argue your way. Please subscribe. And income-driven repayment plans. What's the difference between the two and what are some of these repayment plans?
So there are about 6 student loan repayment plans. Everyone defaults into the standard 10-year repayment plan. And that plan has the most expensive monthly payment because just like it sounds, you pay for 10 years, it's the same payment every month, and your loan is paid off at the end of 10 years. That can be hard for some people. And so there are this group of repayment plans called income-driven repayment plans. These repayment plans tie your monthly payment to a percentage of your discretionary income. And they have cool names like income-based repayment, which is the oldest. There's pay as you earn. And then there is the brand new one that President Biden just announced, which is SAVE, which, oh man, I always botch what it's called. It's saving on a valuable education. It doesn't even have the word repayment into it, so it kind of messes with my mind. But SAVE is the newest student loan repayment plan. And these plans are extremely helpful for 2 reasons. Number one is that they give you some of the lowest student loan payments, monthly payments available on your student loans. Number 2 is that all of these repayment plans have student loan forgiveness attached as part of the plan. And they qualify you for other better student loan repayment programs like public service loan forgiveness. So if you're looking at this list of student loan repayment plan options, most borrowers are going to want to hop on this brand new SAVE student loan repayment plan. It's going to provide the lowest monthly payments. It's going to provide loan forgiveness options. It's going to qualify you for programs like public service loan forgiveness. If you were trying to pay off your loan super fast, there's other options like I said, the standard plan, but most people are going to benefit from SAVE.
Is it too late? So some of the qualifiers here for the goal of these income-driven repayment plans is for individuals making less than $15 an hour, about $30,000 a year, to ideally have no new plans, and no payments due. And for married couples with 2 kids, that would rise to $62,000. Of course, you can find all this on the website or through your lender. Is it too late for individuals to enroll in those available plans? How does that work?
Not at all. So you can change your student loan repayment plan anytime. So it's really easy to do. And I think a lot of people get kind of scared about this. So you can go to studentaid.gov and you just log in to your student loan website and you click enroll me in an income-driven repayment plan, and then you choose the SAVE plan on there. You can also do this on your loan servicer's website. Every loan servicer is a little different, so I can't tell you exactly how it is, but they all have the same feature there. You can also call your loan servicer, but I'm a millennial and I hate phone calls, and I also don't trust people to do things right on the phone. So if you can do it online and you can do it on studentaid.gov, I highly recommend it.
And as you mentioned, this is actually the case for all plans. I didn't know this before, but all borrowers with outstanding debt after 20 years on income-driven repayment plans, I think you said this was the attachment, would have their debt canceled for graduate degrees, and for, undergraduate degrees. For graduate students, it'd be about 25 years. And they estimated about 85% of community college students would have their debt forgiven in 10 years because they're averaging around $12,000 in debt. So some FYI for the audience.
Yeah, so it's just such a beneficial opportunity. And so I think the other thing to realize with the SAVE repayment plan is that starting next year, the benefits get even better. So right now, I was telling you it's tied to a percentage of your income. And you mentioned some income levels there. And that level right now is 225% of the poverty line. Your payment is based on 10% of your discretionary income using 225% of the poverty line. Terribly complex calculation. We have a discretionary income calculator on our site. You can also find a calculator on studentaid.gov. But next year, starting in July, that goes down to 5%. So it literally will cut your student loan payment in half if you qualify. Now, granted, this is for undergraduate loans, not for graduate loans. But for a lot of borrowers, it will significantly lower your monthly student loan payment even more. So if you're like, I'm already on IBR or Pay, like why would I want to switch to SAVE? Well, because SAVE is going to save you even more money next year, and that's why you want to think about it.
Robert, always a pleasure. Please tell the people where they can find out more about you at The College Investor.
Absolutely. So you can find me at thecollegeinvestor.com. We're also on your favorite podcasting platform, The College Investor Audio Show. We're also on video, YouTube, TikTok at The College Investor. So however you like to get your content, I'm sure you can find myself or our team there. And, hopefully we can help you navigate these crazy world of student loans.